Artificial intelligence has become the buzzword of 2023. With the launch of ChatGPT and the chatbot program, there's been a lot of discussion around how people can leverage this technology to become a better person, increase productivity, make more money. But I think the most important question that people should be asking, and that is not being asked right now, is how can you invest in artificial intelligence to reap the rewards of the insane growth we're about to see in this industry? AI is a pretty complicated technology that many people don't understand, so it's reasonable to assume many investors have little to no idea on how they can actually take advantage of this industry. In this video, I want to show you guys how I am planning to invest in the AI infrastructure, whether that be through exposure to ChatGPT, whether that be predictive analytics, or even machine learning. I'm going to give you guys a breakdown of one of my favorite companies, what it does, and how you can take advantage of it. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. Now, first things first, I want to explain exactly why AI matters and in what markets it's going to make the biggest impact. For those that don't know what artificial intelligence is, it is essentially a program that can learn itself over time, meaning the data that the program gathers can be used to improve the productivity of the program. It is essentially a way to do more with less. Just like over the past 20 years, the S&P 500 has required less and less people to generate the same $1 million in revenue. AI is basically a tool to give intelligence to computers so they can perform actions like critical thinking that humans can do, whether that be pixels on a screen, sensor reports, or any sort of information on Google. AI's job is to process through all that data and give us information. Information and data are two very different things, and AI is essentially the link between them, where it can give us information based on a very sporadic set of data. And obviously, OpenAI's ChatGPT tool does exactly that. This tool is an open source software that goes onto the interwebs, runs through a bunch of data, and then provides information in a package format to whoever is using or prompting the specific chatbot. And that's why AI is a revolutionary technology. It has endless possibilities to reduce the workload of most industries, save money, and reduce time. People think AI is a bad thing. It's going to make you lose jobs. It's going to reduce economic productivity. In fact, it's going to do the exact opposite. Just like the internet came in and reduced jobs in the retail space, it built magnitudes more jobs in the software and engineering sectors, which happen to provide much better pay. And that is exactly why I personally want exposure to AI companies over the next decade, as investments and partnerships are ramping up at a record pace. Now, obviously, you can't make investments in ChatGPT directly. It's not a publicly traded company. ChatGPT is actually a software provided by its parent company, OpenAI, which itself is a private business that just focuses on research and development. They don't even make money on ChatGPT. Their main goal is to develop software that can benefit humanity in the long run, and it's pretty clear they're able to do that so far. But apart from investing in big tech companies like Microsoft, Google, or Amazon that might be making very small investments in certain tools like ChatGPT, there is one company that is a pure artificial intelligence business that is targeting a market that is even bigger and less controversial than ChatGPT's. And that, my friends, is enterprise AI. When people talk about AI, they talk about ChatGPT, which is a bot that communicates to a consumer. You and I watching this video are basically consumers on the internet, consuming content and looking for answers to problems. Enterprise AI, on the other hand, is the exact opposite. Enterprise AI is a type of artificial intelligence targeting companies and businesses that can use it to improve margins, reduce cost, and improve efficiency. And the company that I am investing in to take advantage of this AI revolution is C3 AI, which is an enterprise AI market leader. As a matter of fact, since the last time I covered this stock on my channel back in December, it's up almost 80% as the AI buzzword is gaining more traction on social media. And although in the short term a lot of this hype might not last, I think there's really good reason why this company has a great chance at becoming a successful leader in this space apart from just its name. C3 AI's main product, which is the application product suite, allows companies to build AI applications without having to invest in the infrastructure or the people to make that AI application themselves. Building an AI software in-house is extremely time-consuming and extremely expensive. A company has to truly budget its entire business model and fiscal financial year to invest in building an AI software for which they don't even know they might get a good return on. Because there's just so many ways you can build an AI software and so many applications you can support, whether that be predictive analytics, machine learning, over the internet exchange of information, or reliability testing. If you're a company trying to build their own AI system, you have to clearly identify a business objective, evaluate all the available data that you can use to train your models, choose the right tech stack, invest in IT infrastructure, and obviously build an AI team of extremely high salary individuals. Then you need to organize the big data that your company has that's going to be processed by the AI model, make sure that your machine learning models can be integrated into the AI software development, and then make sure the testing takes place seamlessly. Especially for a startup company, this is just too much investment for potentially too little reward if the company makes even a small mistake in their development lifecycle. And that is exactly what C3 AI solution actually is. These guys sell an AI package that is fully integrated and tailor-made to your specific industry, application, or revenue stream and offers you a monthly subscription service for it. Instead of you having to dedicate resources, cost, and time to developing your own AI solution, you can buy AI solutions from C3 AI without having to potentially be at risk of outcompeted by your fellow competitors. And this entire idea of C3 AI was developed by its founder, Thomas Siebel, who actually sold his prior company by the name of Siebel Systems to Oracle for $30 billion almost 12 years ago. Siebel Systems was its own software startup that specialized in customer relationship management applications, which right now is one of the fastest booming industries in the consumer and web areas, as clearly seen by Salesforce's success. And because of this really interesting experience with Siebel Systems, Thomas Siebel has a great idea on what customers actually want. Whether that be customers who have no experience coding in Python or any sort of JavaScript-based language, or customers that might be extremely experienced in AI, but they just don't want to make the investments and wait so long. Microsoft and Amazon are actually customers to AI and partners, not competitors, meaning C3 AI is essentially running its own market and leading its own enterprise AI business development. The enterprise AI market is expected to grow at a compound annual growth rate of 47% to almost $102 billion by the year 2030. And given that the market cap of this company is only around $2 billion today, I see a lot of potential upside if this company is able to execute properly and the plans for AI revolutions go properly. They happen to be one of the only companies that hasn't done a mass layoff despite being a Silicon Valley startup. The company is also still growing revenues by almost 20 to 30% year over year, and unlike a lot of other startups, they don't actually have a lot of leverage. Instead, they are sitting on over $800 million on cash and cash equivalents with minimal debt. I'd say this is a really impressive balance sheet for a company in the software sector that has gross margins of almost 67%. Yes, the company in the short term is not profitable, but that's not a surprise because the margins on a recessionary year are always going to decline and cash burn is always going to increase for a startup that is investing aggressively in innovation today. And that can be clearly seen by the fact that C3 AI just launched a new AI-focused generative product suite that can support ChatGPT integration. And that comes after the fact they announced new functionality and pricing structures for their Ex Machina CRM and commercial data platforms. And that's on top of their newly announced C3 AI ESG platform, which is bound to take advantage of the massive investment you're seeing from the infrastructure bill. And even if there is competition in this space which forces C3 AI to reduce their margins, the company has plenty of liquidity to continue investing in R&D in the short term. They have cash and cash equivalents of around $840 million with total assets of around $1.1 billion. That is in contrast to liabilities or debts of only $147 million, meaning shareholder equity right now is just half of the enterprise value of the company itself. Enterprise value sits at around $1.43 billion with the market cap at around $2.18 billion. That puts the price of sales at only 8.4, which is a pretty cheap multiple for a software startup growing almost 20 to 30% on a compound annual growth rate and with cash that far exceeds its debt. Zscaler, which is another unprofitable AI company, for example, trades at a price of sales of 14. And although yes, slowing growth is a risk in this kind of environment, we all know that investing in artificial intelligence for a company is discretionary investing, meaning when companies are trying to cut costs and reduce capital expenditure, the last thing on their minds is going to be how to improve the efficiency of their business, which certainly is a risk for C3 AI. But obviously, I do understand those short-term risks, and I'm willing to take on those for some of the longer-term potential with this business. I think this is one of the most innovative companies in Silicon Valley. But obviously, guys, that is just my take on the situation. So let me know your thoughts on ChatGPT and the AI revolution down in the comment section below, and how you plan on capitalizing on this opportunity. As usual, guys, thank you very much for watching, and I'll catch you guys in the next one. Take care.